ladies and gentlemen. This is Chapter 7, Cash Recording for a Service Business. So let's recap on what a service business is first. A service business is defined as one that provides time, labor, assets, or expertise in return for some kind of fee, such as plumbers, mechanics, editors, hire firms, hairdressers, and teachers. Alright, so let's get straight to the accounting vocab. So first off, a cash receipt is the amount of cash the business has received from other entities during a period and sources of the cash. So essentially it tells us where the money is coming from. And a cash payment is the amount of cash that a business has paid to other entities during a period and the use of the cash. What the money is spent on is essentially what a cash payment is. And the bank balance is the level of cash on hand at a particular point of time. Things to point out about cash. When we talk about cash in accounting, it's not just the banknotes and coins in the register. It may include cash in the firm's bank account and checks or credit card payments which have not been processed yet. Single entry accounting. So guys, this is going back to chapter 1. So we look at source documents, records, reports, and advice. So right now we're doing the recording process. So we're getting the source documents, and now we're going to be looking into recording it before eventually we do reports, and lastly we talk about advice. So accounting information is communicated to the owner via a written report, but these reports are themselves based on information generated by the recording system. So source documents for cash. So when it comes to cash receipts, we got the cash receipts, the register roll, bank statements, EFT receipts, and credit card receipts. When it comes to cash paid, we got the check butt, bank statements, and EFT receipts. So here's an example of a cash receipts journal right here. You've got a column for the date, you got a column for the details, so what's going on in that transaction. You got the source document it comes from, so the record number. You got the bank, so how much money is coming in or out. Well, in this case, how much money is coming in. And then you got the sections, which covers in particular where those particular sources of funds come from. So in this case, we've got painting fees. Sundries is a term for miscellaneous products. So if you have like a weird one-off transaction that does not fall into other columns that you might have, you just chuck it all under sundries. In this case, the capital contribution is just under the sundries account. GST is also another important column, which records the GST amount from the painting fees. So when we read the 1st of March, we could see that we received money for painting fees. The receipt number comes from an EFT payment, electronic funds transfer, number 1052. We received a total of $1,760. Out of that $1,760, 1,600 came from painting fees, 160 came from GST. Alright, so that's how you read it. And as you can see here, this is exactly the transaction up above, and that's how it's transferred into the journal. Same thing again for the next one, and so on and so forth. When you guys have completed all that, you have a totals column at the bottom, and you simply just put in the totals for each column in here. That way it's an easy way to see during the end of the period, oh, painting fees, we made $4,100 from it. GST, we collected $410. Our miscellaneous stuff, or sundries, we got about $700. Maybe we should take a look what those miscellaneous items are. Okay? Whenever you see BS on here, it literally just refers to the bank statement. That's our source document. There is no number behind the bank statement. So these journals can also be a double checking mechanism to just make sure that you've done the transactions correctly. Because as you can see here, this bank account, the total's here. But if you add up all the totals from all these other categories, so the 410, 700, 4,100, it should equal this same number here. If it doesn't, it means you've made a mistake somewhere along the transactions and you have to find out. Alright, so that's how a cash receipts journal is a double checking mechanism. So for a cash payments journal, it records all the outflows of cash. And it's just the same as a cash receipts journal in terms of we always have the date, we got the details of the transaction, the source document to back up the transaction, how much money is leaving the bank account, and the individual sections which might make up the majority of the transactions. So generally we have a column for those more frequent transactions, and we have a sundries column for those stuff that don't occur all the time, such as in this case new equipment, because we don't always buy new equipment, and a van service. This is something they might do once every month or once every 2 months or something like that. Whereas things like wages, you probably pay this weekly, so there'll be a lot of transactions for that. Drawings, the owner might withdraw money from the system every week, so it's good to have a dedicated column for that. Alright, so again, at the end of it, you put the totals. So in this case, $13.50 for wages, $900 for drawings, $800 for paint, $1,700 for sundries, and $250 GST. And the total payment that we made during this period is $5,000. Again, you could use this as a double checking mechanism. So in this case, $5,000 is the bank total. If we add all the other totals from the other sections, it should equal to $5,000 also. And don't forget, the bank just tells you how much is being put out, or well, in this case, for a cash payment journal, how much money is being put out for a certain period. Alright? If you want to find out the fine details behind this $1,650, for example, you have to skim across and see that, oh, $1,500 is for the actual item, $150 is for the GST behind it. And that's it, guys. That's cash receipts and cash payments journals in a nutshell. So please start working through the exercises and give me a buzz if you have any questions.